following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 13th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally 727-445-1044. You can always send me an email, steve@tfnn.com. Just send that heading line, put radio show question. That'll get to me inside the Tiger's Den. You can send me an instant message because any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 85 points. He's trading on 21,321. S&P up 9, about 0.4% for both of them. The NDX 100 up 0.7%, 57.45. Russell 2000 up 4 points, trading at 14.23. The semis are up 5. New York Stock Exchange is up 40 points. All the indices, the primary indices that you and I track, they're all to the upside. Nice bottom that was put in on Friday. Really, bottom really was yesterday. We made a little bit lower low inside the Qs. Time to take off to the upside. The Dow is already showing you that that's what it's doing. They got the volatility index down about -8, -9%. It's off by a buck, trade out at 10.45. Gold is back only $2. And so it's going to be an interesting battle here between, is it gold that is showing us the card, or is it the Japanese yen that is showing us the card? I don't know. Silver is down 18 cents. That's off about 1%. Light sweet crude up 23 cents. That used to be one of my numbers on my jersey at basketball, 23 and 34. Why did we have different numbers for the away games? That was always interesting. Lead the charge here to the upside. They don't do that anymore. But to the upside, you got Priceline up $32, Tesla's up $14, Google's up $11, Tesaro is up $7, Intuitive Surgical up 7, Transdigm Group up 6. To the downside, oh, it can't have to the downside. I only have point. That is really weird. So that's really, really weird out there. I'm going to have to reset this. Talk about something. I've got point losers and it has Priceline. But that's clearly not the case out there. That's too funny. Okay, well, I didn't notice that. All right, well, let's go get to these markets out here. Let's start off by taking a look at the indices. So let's look at the NQ first. So let's take a look at the daily chart here for the NQ. Really beautiful setup from yesterday. If you just come back all the way to that election cycle low, November the 9th, and you just start running a trend line off of it, that's that red diagonal line going from lower left to upper right. What you will see is that price basically was right to the T yesterday with regard to the low that was put in inside of the NQ, and then you had a nice little hammer candle, right? So the hammer candle right down to the level of support tells you the market's trying to hammer out a bottom. Now, that hammer candle is going to be really important. If, in fact, it holds, which I suspect that it will. In other words, no A to B equals CD to the downside that forms out here. That's just one of those additional confirmations that the NDX 100 is headed to the 8,500 level. So yesterday's low is certainly very important. Not that it can't be tested. It would be if it were to form an A to B equals CD to the downside. So this chart here, daily chart, says, okay, time to go head up to Stevie's oscillator and change line. So 58.52 becomes its target. Now, if we go take a look at what's going with the market profiles, with the TAS market profiles, let's look at it from two different perspectives out here. Let's take a look at the number of stocks, 107 of them inside the NDX 100. Let's go take a look at their message. Now, yesterday's close, this was this was a nice signal out here. Here's the NDX 100. I'll just blow this chart up on our screen. And the red line here is identifying the number of stocks, individual stocks, that are trading below the bottom of their market profile. This is on a 60-minute chart. The green line, the number of stocks trading above. If we use the crossover as a signal, it's not going to be a timing tool to be able to catch the bottom or catch the top, but it tells you when you're on the wrong side of the trade, and certainly for the time frames out here, or what's likely to happen. And then how you use this is the gift is, if you're using a 60-minute time frame, you would be looking for price to come back and test some level of support. Might be Stevie's red line, might be the top or the bottom of a box out here. Nonetheless, what I want you to see is that you had a nice little signal that came in yesterday at 4 o'clock when 30% of the stocks, there were 30% trade above the box and 27 below. So you have a nice little bullish crossover there. If we go take a look at the weekly chart, weekly time frame, you can see we've had a nice bullish crossover ever since November the 18th. Not catching the actual November 9th bottom out here. Remember, I said this is not going to be the timing tool to catch the bottom tick. But the weekly, very healthy, 43 above, 16 below. Let's take a look at the daily. When's the next actual real signal out here to confirm that the move down on Friday was nothing more than just a buying opportunity? Right, a buying opportunity is going to be when we see the next crossover on the daily basis. There are only 26 stocks right now trading above the market profile on the NASDAQ 100. Really, the NASDAQ 106 or 7, I believe, 107, I believe. And there's 41 below. However, that's not the same picture. So that's what's going on inside the NASDAQ. Again, it's not going to be used to be able to time the bottom. That's what yesterday's move was, coming down to the bottom of a trend line, forming a hammer candle. We'll look at some other stuff out there. However, if we take a look at the health of the S&P 500, that's really row 1, column 2, very top out here. And you can see the weekly is a nice mean and green. The same thing with the daily, same thing with the 240, same thing with the 60. You really think that the ES Mini or the S&P has formed a top out here? At a minimum, you would at least see the 60-minute chart have a bearish crossover. And guess what? That is not in the cards out here. So what should you expect? What should you anticipate? Prices are moving higher. Whether you like it or not, they're moving higher out here. If we go take a look at the ES Mini as an example, and we look at the September contract, you can see that right now, price today getting back into that wonderful territory of being above Stevie's red line. That says we now have a rising price oscillator. As long as there's a close about 24.33, we won't worry about the ticks out here. Close about 24.33 says it's going back to the highs. Going to go back to the highs, going to take out that 7th wave move. That's the letter G out here. That's the only potential, and I do mean potential, topping pattern out here. It's ready to continue its move out there. When we come back from the break, I'll show you what the ES Mini did intraday. We'll look at the 2-hour time frame chart out here. We'll go take a look at Stevie's red line. We'll go take a look at that price oscillator, because it was a beautiful test. The opposite of the same type of test inside of silver, which is just looking horrible, disgusting, nasty. It wants lower prices. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Just quickly back to the NQ out here. So it was a 60-minute crossover we were looking at that took place yesterday afternoon as we came into the close. You see the 60-minute chart out here. I'll go ahead and blow it up on the screen. So it shows some resistance at 57, 63, 45. It should be able to take that out without a problem. You've got enough market breadth out there that says that should not be a significant level of resistance. Maybe a resting point, but that's really about it. If we take a look at this, now you'll see the actual contract I have up here is the synthetic, which just simply means I've been able to stitch together the contracts and as opposed to showing the continuous contract, to provide you and I with better TAS market profile information. So the 240-minute chart already above resistance. That was 57.48. So that's off to the erase. So we know that that market profile was already bullish. That's why I was able to take that level out. The daily I mentioned is the one where there is a bit of the struggle. And you can see that where price has found resistance thus far today is at the 57.63 level. That is the bottom of the daily box. If price can close over that area, 57.79 becomes its mark. And above that then says you can run to the 58.28. You'll see on the weekly 57.88 is the number. That's the number I would really be paying close attention to, because closing above that, then you got 58.28 coming at you, and you probably have a new all-time high. Much to many people's chagrin out there. I don't know why. It's about riding this huge bull market to the upside. Now, I mentioned the ES Mini, the 120-minute chart, because it's a perfect example of one of the things that you and I like to take a look at, especially when you're coming off of a bottom out here for confirmation that price is doing something more than a counter trend rally. And if you take a look at the very bottom panel of my screen, that's that price oscillator. And the really cool thing is, we're going to go ahead and show you this, is that when that price oscillator gets to the zero level out here, that was taking place at about 9:30 as the market was opening, as price gets up to that zero level, then what you're looking for is price to come back and test DB's red line, the oscillator and change line. That's really helping us to measure that very bottom price oscillator to let us know if that price oscillator is rising or falling. That's one of its real primary uses out here, especially at that zero level. Now, when price pulls back as soon as you're at or near that zero level, comes back and tests Stevie's red line. In this case here, it was a test of my red line and the 120-minute TAS market profile, and closes back above it. It's a little bit of a trampoline effect. That is a bullish mode. There's nothing bearish about that pattern when you take a look at it. As well, now you've got the Tom DeMark setup, that little 9 count out here, and that 9 count was trading with inside box 6, or I should say candle 6 and 5 out there. Normally says a pause, though there has been no pause here. So you now have on the 2-hour chart 2 very bullish messages out here. Look, I can't tell you what's going to happen in the next moment. We can go look at a chart to figure it out moment by moment. But 2430.75 right now is a support area on the 2-hour chart for the ES Mini. So that's how you use a price oscillator. Certainly Stevie's red line. Go ahead and use the Tom DeMark setup system out here. That's a beautiful thing, as well as the TAS profiles. Each of these are, which is nice to show this on one chart, one intraday time frame, where all these things come together out here, and how the market actually communicates to you in today's day and age. If these are things that don't make sense to you, I get it. But then attend my workshops. Subscribe to the newsletter where I talk about this, and and I can spend time with you. You really, if you're an active trader, you want to be able to utilize this set of tools out here, because it's just simply awesome. And I want to be able to teach you awesome things out here. Now, if a request to go take a look at platinum, there was a request to look at Minneapolis wheat. I don't have that on my system yet. I'll try to search for it during the breakout there. But let's go take a look at platinum. Platinum we can go take a look at, and we'll go look at the usual suspects. Of course, I'll need to go take a look at my email, see if there's any requests out here. But platinum is down $17. And when we take a look at platinum as we speak right now, we're looking at the daily, the weekly, the 240, the 60-minute charts out here. You'll see that all of the bars are red. That means that everything on every time frame is trading below the bottom of a box. That's not good out here. In fact, that says you want lower price. Now, lower price, we just simply go take a look at the weekly chart out here, and you're asking for a good entry point. I don't have a clue. I don't know. I don't know if 896.40 or right around there, the bottom of the swing point from the week of December 12th, whether that's going to hold for you. It held last time out here. The last time, by the way, the week of May the 1st, May Day week out here. I don't know if that's going to hold or not. The way that you would try to identify an entry point is you'd at least want to see some type of turn in the 60-minute chart out here. You want to see a brand new profile form. You'd like to see it have a bearish, that's right, you'd like to see it have a bearish structure and then price close above the top of that box. That would give you a signal that, okay, the bulls are saying they're ready to roll. Whether or not they can win the game or not, they're telling you that they would be ready to roll. There's nothing here that says that platinum is getting ready to roll. Now, since we've talked about platinum, we ought to go take a look at gold out here. In the case of gold, it's just down 80 cents as we speak right now. What is it doing? Well, gold had really good support at 1264. I say that because a 60-minute profile, both the bottom and the center of the box are right there at 1264. Now what price has done is gotten right up into this 1268.30 level, your 1268.20. That happens to be the top of the 60-minute profile out here. 1269 is the center of the box with regard to gold on the 240-minute time frame. Capturing that area, closing above that, would be short-term bullish and say gold could make a run to the 1273. If it's going to do that, then it needs help from your friend and mine, and that would be the Japanese yen. If we take a look at the Japanese yen, we'll look at it on the futures contract as well. Let's go see if this has been able to take out a level of resistance. The level of resistance in it is going to be 9133.9133. If you see a close above that, then that would bode well for gold continuing to bounce. But in order for gold to really get its mojo and not go ahead and just simply give you a head fake, what does Goldilocks need to do? Well, let's go pull up that gold chart and we'll figure it out. We'll go ahead and give you that number. I'm just searching for the symbol right now. Okay, we've got it. So let's see if the system will go ahead and pull that up. And I'll move it over onto the screen for you. There we go, 1268.20, right? That's what we're trading at just about right now, 1268.30. Yes, we are. Hey, how about this? You might have a hammer candle today. It's too early to call. It's only 1:25 in the afternoon. What gold needs to do to get back on track needs the yen to strengthen. We can look at that as we did during the yen futures. That would be headed higher. If we look at the currency pair, the yen headed lower. And it needs to overtake the number of 1276.20 as we speak right now. If it can do both of those, then it's suggesting, okay, maybe it knows something about how gold is going to respond to the Fed tomorrow. But if it is unable to overtake 1276.20 out here, you've got a neutral to bearish message inside of gold. What about the case of silver out here, high-ho silver? It has a lot of work to do. Not a lot of work. It has a lot of work to do. If we go take a look at the July contract out here, price would need to close above, come on, show us, $17.15. Otherwise, it's headed into the 16, well, it's already in 16, around 16.25. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go to the question line out here, the question line from emails. First one from John in Sarasota says, Steve, what do you see short-term for the Qs? out here, the QQQ ETF series. So what I see is that it put in a good bottom yesterday, and it's headed higher. If we just take a look at the QQQ series, let's go specifically to the ETF. Here's what you and I know. Huge volume on June 9th. The total volume there was 109 million shares. Last time that the Qs had volume like that, John, was all the way back here at the bottom. Let me underscore that. Let me say that a little louder. Was at the bottom that formed on August 24th, 2015. 150 million shares out there. What does that mean? That means the Qs found a bottom. The Qs make bottoms with volume. It is just simply that simple. If you go take a look at the time before that when the Qs made a bottom, back here during the October 16th level, 93 million shares. The day before, 108 million shares out there. Well, what did we do yesterday and the day before? We did 109 million and then 104 million. That is how the QQQ series ETFs, different than take a look at an individual stock or anything along those lines, that is how it makes bottoms. And quite frankly, if you were to measure the volume over the last 2 days, not today, the last 2 days, and compare it to volume in 2014, this volume would be screaming off the charts. Why? Because the reduction in the number of shares outstanding in the QQQ series ETF is massive. The decline in the float is massive. So the volume in 2014 isn't even similar. We didn't talk about 2014 than it is today. It just says that this volume on a percentage basis would be even huger. Not that that's the word out there. That's a word, but we're making it a word. It formed a bottom. Now, can I guarantee that? No, but I can tell you, I can share with you that that pattern is so prevalent. Just take a very clean chart, make it the Qs, go take a look at all the bottoms, go see where the volume is inside the QQ series ETF. Go back as far as you want. You can go back further than the last 6 years out there, and you'll see that that is a very important pattern. So, John, short term, I don't know what I mean by short term necessarily, but I'll just say short term, maybe like, what do I see from a day-to-day basis out here? At this stage, the Qs have formed a bottom. Now, if we take a look at their market profiles, it's running into some resistance out here at the bottom of its box, 140.38. You close above that, then you're going to go run all the way to the top being the 142.58 level out here. The event on Friday was caused by one thing and one thing only. Sellers. No, it wasn't just that. It was this. It was a fund that was liquidating. Let me show you what I mean out here. Let's go take a look at NVDA out here. We can look at Apple. We can do the same. And I apologize for those of you that saw this yesterday, but you're going to see it again today out here. And the reason you're going to see it is for a reason. Everything happens for you, not to you. And this is a signature. I could show you a text message that I sent to a buddy of mine who happens to be a fairly good-sized holder inside of NVIDIA. And as soon as I started, the text message was sent to him like around 10 o'clock in the morning. So right about, I don't know, right about here, 10:25 or so. And what I started to notice inside of NVIDIA, and it persisted throughout the day, was it looked like there was a trading desk or desks that were starting to unwind. They had a mission, and it was to unload at that stage NVIDIA without anybody really even taking complete notice as to what was going on. How could you not notice it? How did Steve notice it? Well, it was really pretty simple. It's called a linear move. When you see moves like, if you see people trying to dump out the trucks out there, if we go take NVIDIA as an example and we go ahead and we put up the volume, it's all being done in a nice, gradual way. Yeah, they're buying and selling this equity, not to bring too much notice as to what's going on out here. That linear move, when you see it, and I love the mere fact that the reason why I sent the message to this buddy of mine was I said, because he's held it for so long, and I said, you need to just go put that in your safe and throw away that key now. I don't want you touching these shares. So longer term, this thing is headed much, much higher. And he said, hey, I'm interested in buying more. And then when I gave him the figure that it was going to likely trade to, which was the top or the bottom of its daily box out there, he said, there's no way it's going to get down there. And that was at like 3:10 in the morning. The reality is it almost got down to that pricing level. But when you see this, it is an indication that there are trade. This is and it's done so nice. This was in NVIDIA. It was done in, I don't know. I didn't look at Google, but let's go take a look at Google. It's a 5-minute chart. You put it on short-term time frames, and you see the not GGOG. You see the pattern out there. In it, you don't see it. Yeah, look inside Google. Look at that little trading desk out here, just dumping it. You don't know when it's going to stop out there. You know that they've got they've gotten orders to get it done by a certain time frame. Usually it's in that 2 o'clock-ish time frame, but you know they're gonna get their work done for them, and then they're gonna head to the Hamptons. Look at that linear move to the downside inside of Google. You can see the same thing inside of Apple. So what was that all about, John? I know this is the long-winded, feminine version of giving you the answer, but it's important. Otherwise, I really wouldn't do this. It's important because if you knew now, which we found out yesterday, that all that Friday's event was a large fund getting rid of $8 billion worth of, because they had to raise $8 billion in cash because of the liquidation that's going on inside their funds, because of money that needs to be given back. $8 billion. And they are heavily in the high-tech area. That's what was going on. That's why the Dow was moving higher. The Russell was moving higher. It wasn't because we're all of a sudden at the top of the market out here. We're not even close to the top of the market. When we get to the 8,000, 8,500 level inside the NDX 100, then wake me up. But, John, that's what I believe is going on. This was the signature of exactly what it looks like when you've got trading desks that are unloading. They don't really want anybody to truly take notice of it. And therefore, they're done. They're no longer in here. They don't have more to unload. They took care of all they needed to do in one day. Now you got everybody that has the jitters. Is it over for the tech sector? Are you kidding me? It's not even close to over with the tech sector or the semis out there. They're going to continue to kick, yeah, you know what, and continue to move higher. So, John, that's my short term. That's my medium term. That is my long-term view of what the Qs did, are doing, and will do out there. Let's go to Tom. He wants to take a look at, says, still day trading the JNUG and the Nugget. Past several days, I think I will jump out before tomorrow's Fed meeting. I think that's a pretty good idea out there. You know, you've got an event that's coming in play out here, and unless you get some other type of a clear signal ahead of time, what could that clear signal be? We really took a look at it on the daily basis. You know, you need to see gold close above Stevie's red line. You need to see the yen really take off. I think that's a great idea, Tom. You know, just go ahead because you're trading this so well on both sides of the trade. I can't give you a reason. I can't share with you a reason to do one or the other out there. So that's a beautiful thing. Thanks for writing in. That takes care of all the requests off of the request line that I see. That was coming from the email. So we'll figure out what else it is that we want to cover. You've got the Dow up 84, the S&P up 9. Hey, how about that summation index? That's what we'll take a look at next. You know, the New York Stock Exchange, new all-time high today in its advanced decline line. Has there ever been a bear market that has started when that has occurred? Not that I've been able to find. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Dow's up 80, S&P's up 9 points. Let's go take a look at that New York Stock Exchange out. Well, first, let's go take a look at the advanced decline oscillator readings for the NYSE, the NASDAQ Composite, the Dow, and we can see they're all above zero. They remained above zero even on Friday inside the NASDAQ Composite. That was just telling you that you had a lot of market breadth. They were just selling in certain issues out here. It wasn't widespread. I mean, that's what that message was of the NASDAQ Composite, just confirming what both you and I know, which was just was a fund, a hedge fund that was just simply, had to get out of position, had to get out of positions out there in order to give money back to investors. It was that simple. If we take a look at the spot volatility index, bottom right-hand panel, you see it's below the 50-day exponential moving average. Gobs of liquidity out there inside the marketplace. Yesterday was a little shooting star for those of you that like those candles. That's a bearish or can be a bearish signal. They either work or they don't. What I mean by that is very next day, if they truly were bearish, what you will see is you will see price move lower. What's happening in the spot volatility index? Price is moving lower. Where is it headed to? 974 or lower, the bottom of its band out there. Speaking of bands, only you and I know that would be a Dave Mason tune out there. When did he actually do that song, release that song? I think it was in his young teens, late teens, early 20s, something along those lines. A great tune for those of you that are Dave Mason lovers. He's done so many good tunes for other artists as well as for himself out there. But only you and I know is that the advanced decline line. Let's go take a look at this chart here. I'll just go ahead and I'll put one thing on at a time. There's a number of tools and indicators out here, and we can take a look at the meaning of each of them. So let me go ahead and turn them off here. We'll turn off the so we'll just leave the advanced decline line out here because only you know and I know all the love that we've got to show for the NYSE. And what I mean by that is that you are now at a new all-time high reading out here. Don't pay attention to my number, 403,962. That's just simply adding up all the previous advanced decline data, and because mine starts back pretty far, it's a fairly large number out here. What we know is that you're at a new all-time high today. And by the way, so is the NYSE. So it's at a new all-time high. Advanced decline line is at a new all-time high. And what we know is that there never, ever, ever, ever has been a bear market that has started with that occurring. You can go back as far as you want and look, and you just won't find it. You'll see divergence at the top of bear markets where you have price making higher highs and the advanced decline line not confirming it. But you don't ever, that doesn't mean you can't get pullbacks. But there's never, that's the only thing you don't have to worry about a pullback. You should be looking for a pullback as a gift. Right? If you get that, just remember that what you know is that the advanced decline line on today's date, which is June 13th, is at a new all-time high. And you would want to buy that next dip. So that's what the advanced decline line data is showing both you and I. Let's go ahead and we'll turn that off and see if I can do this in order here. Not that there's really an order, but if I worry about, here's the only slight problem, and I do mean slight problem. This is the volume. Okay, summation index for the advanced decline line. It's not yet at a new all-time high. It's getting up there, and we have a nice little rising bottoms pattern here. I'll go ahead and explode this up. You can see that the descending trend line was busted through yesterday, and you're getting follow through today. We can see we have a rising bottoms pattern in it. So this is really confirming what we are seeing with regard to the advanced decline data. With regard to the New York Stock Exchange, the 3,500 issues or so that are traded there, it's not just healthy, it's very healthy as we take a look at it. You get the volume oscillator to a new all-time high. Then I'm telling you, there is not a bear market in sight for months at a minimum. There's typically a delay of at least 3 months. The earliest that you typically see any type of bear market, and I'm not saying that's what we're going to see. I'm just saying the earliest type of event of that is about a 3-month period of time, and that's what that volume summation would look like. If we take a look at just simply the advanced decline oscillator, you can see you're at 49.88. You're above zero right now. That says the bulls or the buyers are the ones that are in control. So that's the meaning there with regard to that. If we take a look at the summation index, that's the sum of all of those advanced decline oscillator readings. You'll see the reading is 145.03. It's above zero. You're above zero. You're rising. And that says that price is going to go ahead and continue to rise inside the New York Stock Exchange. Don't forget the New York Stock Exchange has got a huge breakout pattern, and I do mean huge. In fact, when it first happened, I said, how can that be? Is this really going to happen? You might say, what are you talking about, Willis? Let's go take a look at the NYA. Let's put this on a monthly basis out here. Let's just use our normal, and I do mean normal, consolidation breakout type pattern out here. Can we do that? Can we do that? Can we do that? Let me see. Can we do that? Nah, we can't really do that here. It's not the New York Stock Exchange. I must be thinking of something else. Okay, on to the next thing. Oh, let me go back here to the, let me go back and see if I finished off that chart. Here we go. So you got that, the summation index. That is as bullish as it gets out here. And we can't, unfortunately, trade that indice, but it does tell us about the health, of the market, as well as a bunch of closed-end bond funds that are inside there. As far as the new highs out here, as far as making new highs, you're at 108 today. Has it taken out previous high areas such as December 8th? No, it hasn't. Has it taken out the high from March 1st or even the time period here of June 2nd? No, it hasn't. But is that really a bother? Nah, it's something to pay attention to, but it's not like that's going to go ahead and get our skirts in a tizzy out here. Even if you could get our skirts in a tizzy, it's certainly not coming from the NYSE. So it is just simply healthy. Okay, so we've covered the volatile. Oh, the S&P 500. You might ask, well, Steve, where is the S&P 500 going? It looks to me like it's ready to roll to 2509 or somewhere in that area. That happens to be, if you're watching us on TigerTV, you're looking at dead straight center. That is the weekly horizontal trading range level out here. That little dash line was the midpoint. Price sort of stalled here for the last couple of weeks. Has come back, traded into a 24, 22-ish. It's rejected it by continuing to move higher. Looks like it's going to do that and head to the 2509, 2522, 2559 level as its next move. Final move? No. That used to be the target. Remember when we were calling S&P 2500? For those of you that have been longtime listeners and you're like, no way, that's not likely going to happen. Well, guess what? It's just around the corner. And that's not where it's stopping. It wants to continue. I think my price target on that now is around 3,400, 34, 35. Don't ask me when. That's not as important. But in that, you're going to see it over the course within the next let's see, it's June, July, August, September, October, November, 5. Within the next 17 months is when you will see that inside of the S&P. If you knew, not that I do, but if you knew that the S&P 500 was going to be at 3,500 between now and the next 17 months, what would you be doing on dips? What would you be doing on dips? Would you be looking to buy them? Would you be looking to just short the Sam heck out of this marketplace? If you knew that that's where price is headed to. Now, look, I don't know that that's where price is headed to, but I'll tell you what, 2509, that is absolutely game out here inside of the S&P 500. Once it takes out 2509, then you're looking at 2720 and 2682 as the levels. Steve Rhodes with TFNN. Hope you're ready.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 80, S&P is up 8. I was wrong on that. Dave Mason was in his 20s, I guess, based on this message here, this email. He was around 22, 23, 24 was the age when he wrote that song. You know, most people, I don't know if you know Dave Mason's songs, or you've sung them, or songs that he's made popular, right? Because he's played with just a ton of artists out there. One of his famous songs, for those of you that other guitar players. Well, not his song. It wasn't his song, and it wasn't Hendrix's song, but they both made it popular all along the Watchtower. In fact, whose song is that? Do you know? Does anybody out there know? Who wrote the original music? I don't know that. I don't recall. All along the Watchtower. I know that they were both friends, both as young chaps. They both were friends and hung out with each other. And Dave Mason was no Jimi Hendrix, but Jimi Hendrix was no Dave Mason out there. He's still traveling around. Last time I saw him was a few years ago, and he is still a hippie. There's no question about it. He used to live, Dave Mason, many years ago. He used to live in the same apartment building with a guy that I grew up with, went to elementary school with. In fact, we talked just a few days ago. Not Dave and I, but the buddy of mine from elementary school. So, in any event, Bob Dylan. Oh, thank you, Tarpon. So that was Bob Dylan's song, All Along the Watchtower. But I don't know that Bob is necessarily known for that tune. Not as much as Jimi Hendrix or Dave Mason, but at least I've heard their versions more than I have Dylan's version. But in any event, so let's finish the show off. We've got just a couple of minutes. I don't know what else it is that we can take a look at out here to help you. Let's take a look at, I don't know, let's look at Apple. Let's since we've been talking about the Qs out here, let's go kind of get a feel for what Apple is or isn't doing out here. These are the daily profiles. If it can get back above the 146, so all that Apple did when it fell down right to support, which was the bottom of its weekly profile level. Now, did it hit it exactly? No, 141.72 would have been hitting it exactly. What did it hit? It got down to 142.51 out there. Right now, what it's trying to do is get back above resistance. The resistance 146.70. What happens if it doesn't get above it today? Nothing. But if it does get above it today, well, you have a brand new daily profile. So if I were to turn the weeklies off, just to show you something about Apple out here, if I were going to turn the weeklies off, there, voila, they're off, and I just kind of blow this up on my chart out here, you're going to see that yesterday was the formation of a brand new daily profile, which formed above price. That is a very bullish pattern inside of, no, that's actually a bearish pattern out here. What am I talking? No, it's actually, it's bullish. This is bullish. Price inside of Apple is headed to the 152 level out here. 152 even, Steven. The question, can we take a look at oil? We can go take a look at oil, Danny. As we go look at it, we'll finish that off here during the next minute. Let's take a look at the profiles. Let's go ahead and use our synthetic contract out here, so we'll put that up on the screen. As we take a look at oil on the 60-minute chart, it is bullish. On the 240-minute chart, it is bullish. On the daily chart, it is now bullish. Where is light sweet crude headed to? Well, the first place it's headed to is 47.23. 47.23 is going to be the bottom of its weekly box. If you see it close, Danny, above 47.23, price is then going to head to 48.77, maybe even 51.39. So at this stage of the game, we're seeing a bullish signals inside of light sweet crude Texas tea. Well, folks, have a terrific Tuesday. Stay tuned. Your favorite polar bear in mind, David White, is up next. After that, we've got Tom O'Brien from 3 to 5, and after 5, you've got Andy Heck to take it on home. Have a great Tuesday. We'll see you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.